Bell rolls is the reporter thrown into the secretive world of the Forex Supermodel, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager. Hello, I'm Professor Code and this is the Forex Supermodel preparation video for day trading the Forex Supermodel. We're going to be doing actual sort of day trading videos at some stage, probably well, soon as, maybe in the next 2 or 3 weeks. And this is like a prep video to get you up to speed and organise yourselves so you can get the best of what we're doing if you're interested. So anyway, let's make a start then. So the first thing, so number one then, you need to hook into an economic calendar. We use FX Street. We've got no connection with FX Street. We don't get any money from them. We don't give them any money. All we do is access it on the internet. We don't pay for a premium service. We have the normal donkey service that they give for free. And what we're looking for then is, so you get yourself, say, an economic calendar, and in this case we use the FX Street. So on the day you're going to trade, you're looking for the timing of data, obviously on the day, the volatility of the likely data, and that's normally split into tiers. Tier 1 being the most volatile, Tier 2, Tier 3. Now on the FX Street they use red for Tier 1, orange for Tier 2 and yellow for Tier 3. Other economic calendars use slightly different system, but anyway, that's that. So and then you need to know the type of data. Is it inflation related? Is it consumer sentiment, etc.? So you're building up a picture of what's happening, and you need to have an awareness of any speeches which are going to muck your day up, market holidays, etc. really. So you can use the economic, well, we use the economic calendar in 3 major ways really. We use it operationally, which is basically sort of seeing what's happening today. We can use it tactically, which so if the market's front running into, say, some tier 1 data at, say, 13:30 in the afternoon, and we know this tier 1 data is coming out and we're about an hour and a half out, then we can use that as a tactical trade possibly, and we can use it strategically, and really we're talking about a longer term view. We're looking into next week probably and beyond to see the way things are swinging. So that's that. So really what's that about? It's about what is happening today. That's the question you're trying to answer from the economic calendar, whichever one you use. Now, I mean, if you don't pay for the economic calendar, which you don't, you'll find that when you get a big raft of data out and there's like tier 1, the tier 1 data that everybody's interested in, and there's tier 3s and all around, you'll find that they do the decent thing and give you the tier 1 data last and pump out the tier 3 data very rapidly. That's to give everyone a chance who hasn't paid to be wrong-footed. So anyway, or perhaps that's a cynical approach. Anyway, so we're going to stop it there and move on to the next stage. So don't go away. Right, we're back. So the next phase is to set up some watch lists. You need a primary watch list, which is for the majors, and you need to set it up in this order. Number 1, euro dollar, 2 euro yen, 3 euro pound, 4 pound dollar, 5 pound yen and 6 dollar yen. Why in that order? You'll notice that this is the sort of the foundation block of the Forex Supermodel. This is, with these 6 pairs, you've got all the major flows in the 4 complexes, which is the dollar, the euro, the yen and the pound, because each one is paired with the others. So the euro is paired with the dollar, the yen and the pound. The dollar's paired with the euro, the pound and the yen and so forth. So you've got a cross match there, and because of that, you've got this unique situation where this watch list will be balanced in net terms. Now, so that's very important, and we'll talk about that as we go. But so that's that. Then you've got the secondary watch list, which is for the other four complexes, which is the AUD, Australian dollar, CAD, Canadian dollar, NZD, New Zealand dollar, and the Swiss franc, the chuff. So and you set them up accordingly. So number one is AUD CAD, 2 AUD NZD, 3 AUD chuff, 4 NZD CAD, 5 NZD Swiss, and 6 CAD chuff. Now, the reason we set them up is so that they're much easier to read just off the bat. So you can see that here on the primary watch list, the first three are Euro first, so you can read that straight. And then likewise, the first three here on the secondary are AUD. And then you've got the 4 and 5, you've got the pound, you can read those two straight. And on the secondary, you've got 4 and 5, you've got the New Zealand straight as well. So that helps matters when you're in the thick of it. You can you get used to reading them, and you can see the flows without having to actually calculate them to a certain degree. Right, so that's the secondary one. And then you need an asset class watch list. So you want gold, you want equities, so you want Wall Street, tech, and S&P. We don't bother with European equities, just stick with the US. Then you want the dollar index, so and then you want the US 10-year, which is the bonds. So and that will normally be the price, which will be inversely related to the yield. So if the price of the US 10-year goes up, then the yields are falling, and likewise if the price of the US 10-year goes down, yields are coming up, and so that's where we are there. So you've got those three watch lists, and you put that one at the top, that one next, and that one below. And when you've if you've got a reasonable size screen, or even if you haven't, we've got our training screen is pretty small. You can get these two watch lists on the screen at the same time, so you can see what's going on. Right, we'll stop it there and move on to the next bit. Right, we're back. So set up watch lists, so we'll get rid of that. So number 3 then is you've got this spreadsheet, if you like. You don't have to do it on the computer. Right, so you've got, if you get yourself a piece of paper, A4, and you write out your primary watch list, your secondary watch list, and your asset class watch list, like so. So primary watch list, this is then, so first one's euro dollar, euro yen, euro pound, pound dollar, pound yen, dollar yen. And then basically you just stick the time in from when you first start. So let's say it was 0930. And you look at your you look at the pit movement on the watch list. So in this case, the euro dollar was plus 16, euro yen plus 11, euro pound plus 20, pound dollar minus 11, pound yen minus 28, and dollar yen was minus 91 in that case. Sorry, minus 9. But it doesn't really matter what the figures are. It's just an example. Right. So the next thing you do is you get your high tech. We've got blue chalk here. So these are positive. So you just put a blue dash. Obviously on your paper you use a crayon or a blue biro or whatever you want. And then you and these are red. So these are like so. So. And that, you do the same for the secondary watch list, which is the AUD and so forth, and you do the same for the asset classes, gold and what have you. So just as a matter of interest, you can see that you've got 3 blue, 3 on the up and 3 on the down there. Now, because of the way we know immediately the euro's strong, fully strong, because the euro, you can read it straight. the pound's weak, and so forth. So you can start to get a pretty quick grasp of where the flows are going. Next thing you do, so as what you're looking for then is, so you get your, we use on the day trading, we use the 10-minute chart, and the reason we use the 10-minute chart is because if you start it more or less at the beginning of the day, so midnight or whatever it kicks in, the chart sort of fits in nicely on the screen, and you don't get compensating stuff from the previous day and all the rest of it. So it's just a clearer way of looking at it. So we use the 10-minute chart, and then all you're doing really is you're looking for the for each one of these pairs. You just need to see what's been happening up until 9:30. So the Asian session, has it been ranging? And let's say let's say it's been the euro dollar's been ranging in sort of like a $40 40 pip range. And so on and so forth. So that gives you, and that's what you're looking for. You're looking for something. In order to get a move, you've normally got a situation where you get a period of dirge, a period of tight ranging before they hit the go button. Now, then you don't need to get too involved with the figures. So you've stuck in whatever these are doing. So the three options are ranging. It's either upward trend or downward trend, really. They're the three options, or somewhere in between on those. But you don't need to get too carried away with that. It just gives you an idea. So and then assuming, so you don't need to be glued to the screen. All you're looking for is, so and then you're slotting in the time. So let's suppose you're looking at 10 o'clock or whatever, and they don't have to be set times, you can be doing whatever. And let's suppose, where was it? You get this situation where, it's just doing as before. And you can see that just by looking at the colour of the screen, so you know basically what's happening without it getting too involved. And then suddenly at 10:09, you get a breakout on the euro dollar, on the dollar yen, number 6. So that turns blue. You mark it up as blue, and then you know that it's broken out to the top side of the range. And then you're starting to get interested. Let's suppose the data's coming out at 13:30. So this is prior data. So all you need to do is keep your head straight and just see what's going on. The likelihood is this will just be an initial breakout, which will retrace back into to negative, but it showed its hand effectively. And that's what we're looking for, that sort of situation. And then when the well, in that case, let's assume that the dollar yen was in some sort of range, and then it broke out to the upside here at 10:09, which corresponds to that. So that's what's happening, and then it decided to do the decent thing and dirge back into the range now and mess about. And then just prior to the data release, so we've been tipped the wink really that there's a potential for a breakout on the up on the dollar yen. Let's assume at 13:30 we've got US retail sales or something like that. So we've got dollar generated data. Now the only two ways the dollar yen is going to go up is either you get a strong dollar or you get a weak yen. Now if it's a dollar driven move, you'll pick that up through gold, because gold really doesn't like that, so you'll see a fall off in gold. And if it's a yen negative driven move, you'll pick that up through a rise in equities normally. So that's what you're looking for. And then the likelihood is the market makers will want to shaft everybody, so they've shafted the breakout traders there, and then they'll probably push it down below this range just to take out some stops, and then you're up and running at 1330. The likelihood is you're going to get this sort of situation, and then you need to back that up with your let's assume you get a bounce. You could have put orders in there if you were ahead of the game, buy orders, but we'll talk about that another time. And so basically that's what you're looking at. You're looking at being tipped the wink. This sort of spreadsheet will tell you when you get a breakout. It'll tell you what the breakout's in. The transmissions will tell you whether you're getting a dollar move or a yen weakness move in this example, and then you're up and running. And then you're looking at things like candlesticks a little bit to a certain extent. So if you got an initial thump down after the data and then it's shot straight up, you'll get a tail candlestick like that, and you'll get a long and you'll get a blue candlestick or green or whatever it is on your, and then you'll have this long tail spike there, which will be indicative of an up move as well. So anyway, we'll stop it there and just finish off. We're back again just to polish it off really. So just to be clear then, what do you need to do to play along? You need access to an economic calendar. You need to be able to assess the economic calendar in terms of the data, volatility and all the rest of it, which we talked about. You need 3 lots of watch lists, and you need some sort of spreadsheet, which you can do hydraulically by paper if you wish. You can end up with something that looks like that. There's no shame in using bits of paper with the crayons and whatever. I mean, who cares if you get the results? And then you need to get your head straight on what's going on. The market will usually tip you the wink before the actual data comes out. It's just a case of being clever enough to interpret it and understanding the transmission. Now, and that's where the asset class watch list comes in, as we said. So you need to differentiate whether it's a dollar, in this case, a dollar move or a yen move, or if it was a euro dollar move, you need to differentiate whether it was a euro move or a dollar move. And again, you could hook the dollar from gold and so forth, and the dollar pairs, and the euro move is less obvious. But if you look at if you set your watch lists, your other watch lists up, so full complex watch lists of 7 pairs on the euro, you can see whether that board's lighting up or down, to give you a bit of confirmation. So anyway, that's where we are there. And then you're sticking in your color coding to try and get ahead of whether it's going to be see what's breaking out. You'll normally find that once you get a breakout, say on dollar yen, you'll get a little breakout on the secondary currency pairs like the AUD and the NZD, and they'll have a little blip just to show willing, and that's further confirmation of what might be happening. So there's a fair bit to it, but you can simplify it and you can get organised and have a go. So at some stage we'll try and put all this stuff into action. And show you a screen with it working, the way we're thinking, and all the rest of it. And then obviously you've got to stick your trades on and manage your trades, trade sizes and stops and all the rest of it. So but that's part of the course. So anyway, hopefully that's been useful. It's certainly a lot of information and food for thought. When we get around to actually doing the videos, not every day is suitable for Forex Supermodel, because you do need you need some quantifiable data, which is no use doing it on a day where it's just full of central bank speakers being interviewed on CNN or whatever, trotting out drivel which gives little spikes. That'll drive you nuts and cock all the analysis up. So anyway, as I said, we'll leave it there. Hopefully let me know if you think that's been useful in the comments, and stand by for a proper go at some stage as soon as we get our act together. So thanks for watching, thanks for subscribing, and goodbye.